The US market is putting in a range day, what some people call an inside day, consolidation day, and it's generally where most traders and investors will lose their money. Now, how can we identify these kind of days before they happen so that we can make better trading decisions and have better trade management? That way we can consistently pull profit out of the stock market even on days where it doesn't seem like there's any profit to be had. Now, I want to start off by showing you the trade I had today on Meta. Here's my entry right here underneath the pre-market low. My ad was on a 2-minute opening range break. Look at my take profit. My take profit happened before this massive squeeze back up to prior day close. Now, how was I able to identify that this was going to happen so that I didn't get squeezed out? And why did I not hold this trade into a loss of the $150 area? In order to understand my thought process on the trade and how I'm able to avoid these situations, you have to look at the overall market, what the overall market is doing. Now, yesterday, 1.6 trillion of market cap was erased from the stock market. It was one of the worst days since June 2020. America's richest billionaires lost $93 billion yesterday. One of the biggest routs in history. Now, what happens on a monster sell-off day? What happens is you get a lot of traders and a lot of people that missed out. And if you miss out on a trade like this, what happens? What happens when people miss out on trade? It creates FOMO, the fear of missing out. So what you're going to get on a day after a large day like this is you're going to get what I call a FOMO killer day. This is where everybody that missed out on this trade is racing to get involved because they feel like they missed out on huge profit potentials, a good entry, whatever it is. And what happens is you get everybody rushing to trade anything. And what the market will do is it will consolidate. You have people taking profit. You have people entering short positions. You have people looking for any reason to take a trade. So if you look at the stock market right here, this is how I was easily able to identify today was going to be a range day. Now, what's going on here is called equilibrium. The market is just bouncing back and forth in this channel. If I were to consider taking a short trade that I was going to hold through key support level break, I would have liked to see the market break the prior day low before open. I want to see the market open up in a gap down underneath support, not above it. So when I see the test of yesterday's low and I see the market not race towards liquidity underneath it for more price discovery, but race back up towards the pre-market high and not in a fast fashion either, chopping around for about an hour before open and gapping up from yesterday's price, that is a clear indication that today is going to be an inside day. And when we are opening above support levels, like on Meta, if we are opening above support levels, like the 150 area, what you're going to get is you're going to get traders who are just going to be jumping into those level breaks short in anticipation that there's going to be continuation, but then you're also going to get people taking profit that were in this monster day yesterday. Their price targets were at the 150 area. Then you're just going to get everybody buying support, everybody buying the shorts, everybody shorting the level breaks, and it's just going to be an absolute mess. So this is why if we don't gap down after a large drawdown day, I either sit on my hands or I adjust my trading strategy to get in earlier and take profits sooner. So that's exactly what I did on Meta here. Instead of trading the 1-minute opening range break, I took the break of the pre-market low, anticipating that I would take profit before the $150 level because we gapped up above it. It was a nice shortable bearish open. However, I anticipated that there was going to be a ton of people piling into trades. Not only that, but there's going to be tons of manipulation, right? There's always tons of manipulation after a large sell-off day. Let's look at the SPY on the daily and let's look at the market reactions after most of these wide range days. Wide range day, chop. 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 Wide range day, hammer. Wide range day, hammer, right? But one thing you notice is when you get large scale gap downs after a wide range day, there are tradable bearish events. So going into today, now if we had gapped down underneath this prior support, all right, or if we had gapped down underneath yesterday's low, it would have gave you a trading thesis to trade bearish towards the prior pivot support, or it would have gave you a chance to trade into the void on these breaks. But the fact that we gapped up after one of the worst days since June 2020, you have to know going into that human emotion is going to play a factor, right? We are not trading these companies, okay? We are trading the human emotion based off of the patterns they are creating. And unless you get more trapped buyers underneath yesterday's price action, especially after a day like this, large selling volume, you're just going to get a trading range day. And that's exactly what's playing out in the market. The market is just moving between equilibrium, all right? And why would you want to be involved in this type of trading? All right. Is there trading ideas here? Yeah, you can trade these channel setups, but do you want to be involved right here? Look at these wicks. You don't want to be involved in this. That's why it's best to just sit out of these days or identify that you are going to either take your profits earlier or you're going to take your stop losses earlier. And that's exactly what I did today. And that comes with experience from trading for the last, 6 years. I hope you guys found value in this video. This is how I identify whether or not we're going to have a range day, simply by analyzing the first hour before pre-market and then analyzing the gap and seeing whether or not there are price points below or above the open that will act as resistance or support. Hope you found value in this video, guys. Now, if you want to see me trade the open live, click this video up here. If you want to know the biggest trading psychology mistake that is killing everybody's accounts, click this video right here. I will see you on the next one.